Good afternoon, everyone. Thanks for joining us today. We have an update with Talisker Resources. Terry Harbort, CEO, is here to give us a bit of an update on the recent news flow. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the presentation on the website. And there will be a significant Q&A section, so feel free to enter your questions in the box at the bottom of your screen. And my colleague Magda and I will get to those after Terry does a bit of an overview. Hi, Terry. Thanks for joining us.
Hi, Deborah. Hi, Magda. Pretty exciting times for Talisker coming on here with the finalisation of our ore purchase agreement with New Gold. It took us quite some time. There were some complexities there that we weren't expecting, but very happy to get that done. Really the last stage or the last step that we've been needing to complete to access the second draw in our royalty agreement and then continue on into production. So very fast transition for us. Very excited here at Talisker, particularly up at the Bralorne site. Everybody's got a very positive view, buoyed, of course, by the gold price jumping up there above 2,100, touching 2,200. So pretty exciting time to be able to heading towards putting a project into production. Deborah, I do have a video here that works through what our mine plan looks like. I know we presented late last year a preliminary version. Now we have a pretty final version of what the next 5 years is really going to look like up at the Bralorne project. I'll run it through. So on the right-hand side is the Mustang Mine. You'll see the development there across the first year or two. We've got about 3 years or so worth of production on the stopes, on the gold veins at the Mustang Mine. While we're developing there and mining at Mustang, we'll actually be developing out to what we call Bralorne West, which is an extension of not an extension, new veins along strike in between Mustang and the historic Bralorne mine. You'll see we've got significant panels, about 5 veins parallel to one another that we'll be developing over time. So a very good place for us to continue development when we've started to deplete things at Mustang. So the reason we're starting at Mustang, as I've discussed before, access is very straightforward. We have stopes and faces ready to go. And the development and mining at Mustang really is to fund our development and our mining on a larger scale. So that's why we're starting at Mustang at quite small scale and then moving across to the Bralorne West area where we've got a significant amount of veins, quite high-grade veins over there as well. So really that's what the first 5 years looks like. As everyone will note, the veins at Bralorne, very continuous along strike. Some of these about 600 or 700 metres of stoping and also very continuous at depth. We can see them about 300 metres, 400 metres of depth. We are pretty certain that we'll be able to continue mining at Mustang at greater depths. Currently, we haven't got drill holes defining that, but as we get underground, we'll look to continue those stopes you can see on the right-hand side further down at depth. Right, I'll pass over to any questions. I think the format today for everyone is more of a question and answer. We've had a lot of things in the works over the last few months, and they're all sort of coming to fruition now. So I think it's very good to have an opportunity for our shareholders and interested parties to ask as many questions as they like to try and get an understanding of what our pathway looks like and what our next 6 months, year, 2, 3, 4, 5, even 10 years is going to look like for the company.
Thank you, Terry. So some questions about the toll milling agreement to start. Are you able to give us a sense of the cost associated with toll milling Bralorne material at New Afton?
Not really, unfortunately. It's pretty tightly held with confidentiality clauses with New Gold. The main reason for that, I think, from New Gold's side is they're actively negotiating multiple agreements. I think we're the third one that they've put on, and they're looking at developing other businesses. So they're quite guarded on what their structure is of the deal. I guess what I can say is that it's a range of payables depending on the grade that we're transporting. The volume that we transport doesn't really matter. It's really the grade. And if we truck low-grade material or close to a low cutoff, then it's not worth very much for New Gold. Therefore, it's not worth very much for us. So the higher grade we can do, the better returns we receive.
Thank you. And do you have a sense of the time between delivery and payment? Do you have a sense of the time between those?
Sure. The way the deal's structured is we pretty well get paid when the ore is delivered. So when it's dropped off at the site, we do an extensive grade control sampling program prior to it leaving. So both in situ, so as we're mining, but also when the material comes out per truck or per load. After the material's been processed and New Gold does whatever they're doing with it, commingling, making it concentrate, there is a true up that's several months after that initial payment. But the bulk of what we get is when we drop off the ore.
Got it. Thank you. And then while we're on the toll milling, you've mentioned before the option of pre-concentrating material before trucking. Is this still an option given the agreement you just entered into?
So we've been looking at various technologies to be able to physically concentrate the ore using various ore sorting technologies. As yet, we don't have any concrete results. We should be finding out within the next couple of months whether that's viable. One thing is for it to be viable from a physical properties perspective. So can we actually separate the ore? If that proves positive, Magda, then we have a look at what are the economics of implementing a system. So we've got to look at, is the capital requirement to put in a system, does it outweigh what the reduction in our trucking cost is or not?
Got it. Thank you. And another audience question, have you started trucking, and what rate or tonnage per day?
Okay, we haven't started trucking yet. We do have a stockpile that we can truck, but we'll be looking probably sometime in May or June before we start trucking the material. The range that we're expecting, we have a trucking agreement that's been finalised. I can't go into too much detail again because of confidentiality, but it's around the $75 to $85 a tonne.
And can you remind us again of the distance the material would travel from Bralorne to New Afton?
It's about 260, I think it's 268 kilometres.
Got it. Thank you. And just touching on mine development, can you give us an update on the progress of underground development and how much development still needs to happen before production or stope mining can start?
Sure thing. So we've finished in January this year, basically the expansion and construction of the portal and of the decline. The total length of that was about a bit over 500 metres. This gives us access to the veins at Mustang on 3 levels. Really, there's some in waste development on the sub-levels and the levels to be able to access where the veins are. It's a minimal amount. We're looking at several hundred metres, and basically that's split between 6 levels. From then on, we're basically into ore development. And this year we're planning it's about, I think, about 700, 750 metres of in-ore development.
Thank you. So when do you you have an expectation of when, like trucking constraints and whatnot constraints aside, you'll be in that mineralized ore?
Yeah, we expect at this time that we'll be in waste development, so ore development. Sorry, so we'll be in waste development very soon. Ore development, which is where we do a larger drive along levels, so then we can mine up into the stopes. So that's a slightly larger volume. That's to allow the loaders and equipment to be able to get in and then extract from the veins that are above that we mine at a narrower level. So we expect to be in ore development in May, and then in that stope development, so the development above where the machinery goes, we're looking like in June.
All right, got it. Thank you. And can you just remind us how many years of production the Mustang Mine Plan would support?
At the moment, our expectation from the drilling that we have done, so we've got basically 3 years laid out, but really we believe that it'll probably continue well beyond that. In the 43-101 resource that we put out about this time last year, there wasn't any new drilling in the Mustang area. It was all in other areas. The drilling that we've done late last year and early this year was focused on resource conversion at Mustang, but it wasn't focused on exhaust expansion at Mustang. So our expectation is that we'll actually be able to continue for another few years, but we'll have to start doing the drill program at depth and also along strike of those veins. But at this stage, it looks pretty positive.
Got it. Thank you. And going back to costs, do your all-in sustaining costs contain the tolling expenses, or are the all-in sustaining costs after trucking and milling?
So the all-in sustaining costs include everything, all in. Yep. So that's trucking, factored in milling, everything.
Got it. And then another audience question: when does the standstill agreement expire with New Gold?
Oh, that's an interesting question. I'd have to look that up. Matt, I don't know if that's something you can look into for me while we're on the line here.
Yeah.
From memory, I think it's probably April this year. Is my memory of it, but I'll get Mac to look up the exact date for you, and we'll cycle back to that one.
Got it. Thank you. And are you still planning to ramp up to 300 tons per day during the course of this year, or when do you roughly expect to get to 300?
So our plan for this year is to basically mine 36,500 or so tons, and looking to increase that. So that's basically from 6 or 7 months of the year, and then move to 300 in year 2, which is the sort of 250 to 300 range, and then by year 3 we're sort of looking at the mid 400s to 500. And then we're in full production years 4 and years 5. So then we're sort of in the 7 to 750 range.
Got it. Thank you.
And I'd love to go a lot faster than that, everyone, but it has to do with what capital you have available. And capital's fairly limited in these markets. We're fortunate to have the royalty draw. But everything else, all the development we're doing is based on cash flow. So if we had wads of cash, we'd be able to ramp that up a lot faster. However, we're taking a financially conservative approach as we're going in here.
Thank you. And then just remind us, looking at the resource component zones, there was Bralorne, Pioneer, King, and Charlotte. But you were kind of talking about Mustang Mine development. Can you just kind of orient us where in the resource we were just in your earlier in the video?
Sure. The the Mustang area basically sits in the historic gap between the King and the Bralorne mines. And it's the entry to it, or the Mustang portal, is closer to the King mine, so it sits to the northwest. Yeah,
makes sense. Thank you. And then touching on trucking again, another audience question. I thought you would start trucking in April. What is causing the delays?
So we won't be able to truck our mined ore because we have to mine it first. It's highly likely that we'll be able to truck our surface stockpile in April. We're finalising a trucking agreement. I think we're just wrapping that up now. And then there's a procurement and organisation process. I'll remind them that the asker of that question that we're almost in the last week of March now, so April's just around the corner. So it's highly likely we will be trucking the surface stockpile, but we need money to mine, and it takes time to do the development. So we can't truck the mined ore until we've mined it, and we won't have mined the ore development until May, and then the ore production until June.
Got it. Thank you. And then another audience question: when does year one start in terms of calendar month? Most
likely at this stage it'll be sort of it'll probably be 1st of May. And then we're looking at, we'll probably reset that to calendar years at the end of the year, so it's straightforward to everyone. It's only offset now simply because of the finalisation agreement and the funding draw, so it's a bit offset to the calendar year. So we'll probably mine till the end of the year and then reset it so it's in line with a normal calendar year.
Touching on the definition drilling program, you've recently been reporting results from that 15,000 meter program, and the grades are quite a bit higher than your 8.85 grams per ton indicated, 6.32 grams per ton inferred. Why do you think the grades are so much higher than what would be suggested by the resource?
It just has to do with the spacing of the drilling. In our initial resource, there was only a small component of indicated. With vein systems and orogenic systems in particular, the more you drill, the less impact the nugget effect has on the deposit. So we know here that historically that the mine grades were nearly 18 grams, or recovered grades. Therefore, the in situ grades were probably higher than that. So we fully expect our grade to track back towards those historic averages. We're using long hole mining, so it's a mechanical mining method. So there is more dilution compared to the historic amounts. But certainly we expect everywhere where we drill more that we'll see that average grade tracking back to 11, 12, 13 grams, because that's a characteristic of the deposit.
And then, are there any hazardous minerals in the ore, cyanide or arsenic?
So there are no cyanide minerals. Just to clarify that for the asker of the question, cyanide is a reagent that's added in a leach process to be able to extract ore out of the material. As far as hazard elements go, we have a mineral called arsenopyrite, which is an arsenic iron sulfide. It is a small percentage within the deposit, although it's often related to high-grade gold. With the permit we have and the treatment facilities and tailings facilities, we're able to capture that material and transfer it into a stable mineral, so it can't get transported out into the environment. But it is a naturally occurring element. It's naturally occurring in the rocks, naturally occurring in the deposit. So it's not something that's added. It's been there for several 100 million years.
Got it. Thank you. And one of the last questions from me before Deb does some corporate questions. Is there shrinkage in the material trucked over that grade a distance? How fine is the material shipped?
I don't quite understand the question. Is an expectation that we'd lose material on the way?
I'm wondering if it's like the we can maybe come back to it.
Yeah, look, I think I understand the question. The answer is no. That the trucks are fully enclosed. It's law and here in BC that things need to be fully covered, fully enclosed. And we certainly wouldn't want to lose any material on the way because it has significant value. But things are pretty well buttoned up to be able to transport. Yeah.
Got it. Thank you, Terry. So I think those were all the technical questions I see now. I'll hand it over to Deb for corporate questions.
Sure. Thanks, Magda. So Terry, a couple audience questions here. How much cash do you have at present, and how much of the Sprott facility have you drawn, and how much of the facility is left? Okay, so I'll answer those in stages. Without the second draw, we've got about $3 million in cash. We've drawn the first draw from Sprott, which was just under 7 million US. We've drawing the second draw. We're in the process of the second draw, which is 11.75 million US. And the remaining component of the Sprott facility is an additional 13 million US. Do you have any work planned on your other projects this year? We haven't really, Deborah. Really, we're solely focused on taking Bralorne forward. Last year, we did a small amount of work on Ladner, and this was to keep up with our assessment requirements. We'll be putting those results out relatively shortly. They're just coming in at this stage. But really, we're 100% focused on Bralorne and this transition into production. So we just can't afford to allocate capital resources or our people to the other projects at this stage. So everything's just parked as we focus on getting Bralorne up and running. Makes sense. And Terry, what keeps you up at night? What do you think the problems could be? Oh, there's a whole suite of things that keep me up at night, Deborah. Mining is always challenging. Fortunately for us, I think Bralorne, the style of the deposit really mitigates a lot of those challenges. From a geological perspective, the things that can be challenging kicking off mining are the continuity both of the structures and of the gold within the structures. So basically what can happen, you can be mining along the structure and the structure can disappear. Fortunately for us, Bralorne's known for its structural continuity and its grade continuity, so excellent shoots. So I think things that we drilled out. So although that is a risk, I think the risk is very low. That's mitigated very low. Some of the challenges always are related to rock mechanics in a new mine. We understand our rock mechanics very well from the historic production. It's a very robust host rock. It's a coarse-grained intrusive, so a very strong material, like a granite that you see in the kitchen. Very, very strong material. So if it's weak, it can add to extra dilution. When you blast, it can bring a lot more material in. Certainly, we think that's a pretty low risk as well. The third thing that could keep me up has to do with reconciliation. So that's the comparison between what we mine versus what comes out of the ground. Historically, Bralorne's over-reconciled. So what that means is more gold comes out of the ground than we actually think's in there. So we're hopeful that will continue. Certainly Leonardo, our Vice President of Resource Development Exploration, and his team have done a great job on modelling the veins. The drill program has gone very well, and it's really highly supported. So even though that's a risk, I think we mitigate that pretty well from the work that the team's done
over the last 3 years or so. The other thing I guess that keeps me awake is creeping inflation. It seems like inflation here and how that relates to our mining cost has actually dropped down. We've seen fuel come back under control. That's had a positive impact, I think, on our economics. If inflation was to continue to creep upwards towards 10 or beyond, I think it'd be super challenging, not just for us, but for all the miners out there. And when we saw inflation come off the bottom a year and a half ago and creep up to 6 or 7%, it had a significant impact on all of the producers, including the majors. It seems like it's calmed down, Deborah. It seems to be drifting back down, which I think is positive for our costs and also positive for its impact on the gold price. Next thing that keeps me awake is the gold price. At the moment, it doesn't. I'm sleeping pretty well these last couple of weeks. But certainly if the gold price was to drop to 1,700, 1,600, then we'd have to reassess our mining plan. Again, we wouldn't be the only ones. There'd be a lot of sleepless CEOs if the gold price was to plummet $600 or $700. My personal view on gold economics is it's probably going to track the other way or hold a sustainable level, particularly with inflation coming down. If the banks then start to reduce interest rates, I think that'll have a good support level for gold, at least for the midterm.
Alternatively, would a significantly higher gold price affect your near-term plans, Terry?
I don't think a higher one would. It certainly make me a lot happier, simply because our margins just continue to increase. We're modelling at a significantly lower gold price, so anything that moves up, it's just pure profit for us. And we can allocate that profit into more development, mine more gold, so it has a cumulative effect on the growth of the company.
And then I had one other audience question. How long is the term of the ore sale agreement with New Gold?
It's at a 3-year period, and it can be renewed beyond that 3-year period by mutual agreement.
How do you look at M&A in the current market context? Is it something you're still thinking about? So M&A where we're the target, or M&A where there's other targets? Either or.
Oh, look, I'd have to say, Deborah, as a target for M&A, I'd have to think we'd be insane to allow someone to take us out at this stage. The whole market's greatly undervalued. We're particularly undervalued as we transition into production. We're looking like being able to, over the next few years, make multiples of our market cap in cash flow. So what we're building here is a really good business. And I think it'd be a big shame to be able to, to want to give that or have to give that business away to somebody else. I think we've probably got some significant shareholders on the call here, and I certainly am. And we've fought so hard through a tough market to get to this stage, really being innovative as a company, not following the usual path of drill something out for 10 years. Really, we've focused and worked very hard. A reminder to everyone that we've only been a company, well, we haven't even been a company for 5 years. We've had this asset for under 4 years, and we've made it to a significant resource, being able to transition this into production in a very short time frame. Most groups haven't even drilled something out in that time frame, but we went very hard. 9 rigs, a great high-grade resource, transition to production in a very short time frame. So I think our teams worked very hard to be able to get us into this great position, and we're set up here for a platform for success. So to be able to, to want to walk away from that when we're so close, I think no, we wouldn't look at it. As opposed to us as a company looking at M&A to grow the company, so growing the company through acquisition, it's always something that our team's got their mind open to. At the current market capitalisation, it'd be a challenging thing to do if we were to pay things with stock. We're focused certainly with our cash to go into development. Development equals more money, which equals more development. So the more we can focus on that, the better. That said, there are some incredible bargains out there. There's a lot of companies who are doing it a lot tougher than us, and our technical team has the ability to unlock value that other teams mightn't be able to identify. So I certainly think in the future at some stage it'd be something that we'd look at, but it has to be a project that can be of the pedigree of a Bralorne. So something that can really help to grow the company forward, or something that we can pick up at a significant discount to market and use our technical prowess to build that value. So sure, everything's on the table, but we have to take a cautious approach at this stage. And really the focus here is Bralorne. We don't want to distract the team. We don't want to distract myself. We don't want to misallocate funds into things that don't bring us cash flow at this stage.
Got it. And can you talk a little bit about catalysts and how you intend to get some momentum into the stock? I think we've seen since PDAC some momentum coming into the late stage developers. So how do you take advantage of maybe some interest coming into the gold space?
Sure. Look, it's all about three things: development. It's all about mining gold. We walked this path up to this stage, and then we're on the verge of going into production. And once we've got that proof of concept, which is just a couple of months or less away, then that's the real turning point for any cautious investors. When we can prove that we can mine, truck our ore, and get paid for it, then that's the major catalyst. And really that overwhelms any other sort of catalyst. As a company, we've met everything that we've told the market. We've been able to acquire this asset. We did a big drill program. We completed all those meters, brought out a resource that was one of the best high-grade resources to come out. We've been able to secure funding to go into production in a very challenging market. We've been able to meet all the conditions of that next draw, all sale agreement, development of the mine plan, bridging agreement with our First Nation partners. We've hit all of those targets. The final thing left is to go into production, and we're right at that stage. So I think that is the major catalyst for this company, and really transitions us onto a pathway of a significant re-rate, an incredible re-rate.
And one last audience question for you, Terry, that we haven't dealt with, which is just about accounting, I guess. Once ore is being delivered, are you going to keep shareholders up to speed on revenue generated? And what are your plans for the revenue? I'm assuming you'll put out quarterlies, but will you have other news releases that go out?
In general, things will come out in the quarterly financials. We may have to be cautious with the agreement that we have with New Gold, that we're not putting out press releases every time we deliver ore or talk about the actual percentages of the ore. It'll all become very apparent in those official reporting figures, I'd say.
And use of the revenue?
Sure. At this stage, it'll be going back into building the mine. So back into waste development to access new veins, new areas, back into ore development to be able to set up for mining, and then into mining to be able to extract those veins and get the gold out, and then also into development to be able to convert more resource in the future years, and also drill and add more resource onto the books as we mine and deplete.
All right. Well, I think that's it for me and for audience questions that we can answer today. Terry, was there anything that you wanted to talk about today that we didn't cover?
No, look, I think the message is pretty straightforward here, Deborah. We're right on the cusp of becoming a producer. We've met all of the targets. We haven't had recognition for that in the market, but very few companies have. We haven't seen the majors that have been cut in half in their valuations. But I strongly believe that our time is coming. We're undervalued as a junior explorer, but when we become a producer, it's a massive, big change. And we're able to do that at a minimal capex. We're able to do that by being innovative, being able to find new pathways to be able to get the most out of our asset and become cash flow positive in a market where capital is very challenging to acquire.
Well, I think you've done a great job, Terry, getting to the point that you're at. And the markets I think it's a good time to be able to transition to a producer for the reasons that you referenced. So appreciate the update. Thank you for everyone that participated. If you have any questions that weren't answered or you'd like a one-on-one, feel free to reach out and we'd be happy to arrange that for you. And yeah, good luck, Terry. Looking forward to seeing some releases.
Thanks very much. I'm looking forward to seeing our first stopes get loaded in the truck.
Yeah, that'll be cool. You have to take some pictures for us.
Yes, absolutely. And we're actually putting together some pretty good 3D photography from underground. We'll build that into a video so our shareholders can actually go into the mine, see where it's being mined. And if we can, we'll try and get that updated on a regular basis. So shareholders will be able to watch on a day-by-day basis how we're progressing, how the stopes are being extracted. Some pretty exciting technology that the team will be putting forward there, and very, very great to be able to keep everyone updated on where we're at on a live basis.
Sounds super cool. Well, thanks, Terry. Thanks, everyone. Have a great afternoon.